So hi guys, today we'll be looking at the fundamental stock analysis for Eicher Motor Limited. A brief introduction about the company. Eicher Motors Limited is an Indian multinational automotive company that has diversified interests in the motorcycle and the commercial vehicle manufacturing. EML is the listed parent company of Royal Enfield. It's a global leader in the middleweight motorcycle segment, and it is headquartered in Chennai, India. The world's oldest motorcycle brand in continuous production, Royal Enfield has made distinctive motorcycles since 1901. Royal Enfield has pioneered in the mid-size motorcycle market in India. Royal Enfield has nurtured and grown the market for upgraders with a focused range of modern classic motorcycles across its wide premium distribution network globally. Over the years, Royal Enfield has registered meteoric growth and is the global leader in the mid-size motorcycle segment and global best-in-class margins and presence in over 60 countries across the world. With the modern designs and technical centers in the UK and India, Royal Enfield designs its motorcycles in the UK and rolls them out of its two ultra-modern manufacturing facilities in India, which is supported by adjacent facilities and global supplier base. EML is also a majority stake owner in VE Commercial Vehicles, VECV. So they have a second aspect to the business as well, which is a joint venture with Sweden's AV Volvo. VE Commercial Vehicle Limited is a joint venture between EML and Sweden's AV Volvo, and it's majority owned by EML, but it's equally managed by both the partners. So Eicher brand of trucks and buses started life in 1985 as a challenger to duopoly in the Indian market, and Eicher made huge progress in the Indian commercial vehicle market, which was further bolstered when Volvo came in as an equity partner in 2008. With access to global technology and processes, VECV is now at the forefront of driving modernization in the commercial vehicle market in India and other developing countries. The Eicher brand is now the second largest in the light and medium duty CV market and is third and gaining in the HD market. The interesting bit that comes across from the conference calls of the company is that the management is focused on the long term and they don't take shortcuts or enter into price wars in order to gain market share. This has resulted in the company being the only profitable company among the commercial vehicle companies in the previous year. Just a brief overview about the business segment. So the point to note over here is that approximately 90% of the revenue comes from Royal Enfield, and around 10% of the revenue, less than 10% to less than 5% revenue come from the joint venture. So the valuation happens mostly across the motorcycle business for Royal Enfield. Just a brief snapshot that 90% market share in India mid-size is held by Royal Enfield. So let's look at the vision and strategy. So this year they made efforts towards becoming a premium global player with an ambition to sustainably grow the overseas presence and business, and with a focus on some of the toughest motorcycle markets in the world. The company has recorded tremendous success on this front over the last year. And over the last few years, they have sharply focused. They're sharply focused on growing strong and empowered teams in the global market, and in addition to growing the infrastructure capabilities. The company has developed greater collaboration with distributors, with many of them willing to partner with EML across entire regions. Understanding the criticality of building greater accessibility and the time to market, they set up assembly units in Thailand and Colombia this year, and in addition to Argentina, with plans to set up one more in Brazil. They have invested hugely in growing the distributor and retail network strategically, setting up subsidiaries and assembly units, and optimizing supply chain infrastructure in critical geographies. From the approach of single store in nodal cities, today they have over 160 exclusive stores and more than 675 multi-brand outlets with unique retail identity in over 60 countries around the world. Over and above building world-class motorcycles targeted at global motorcycling enthusiasts, they have sharply focused on increasing brand awareness and resonance, and have nurtured distinct riding cultures and communities. Uh, so Royal Enfield is committed to growing the middleweight motorcycling segment globally and has maintained a razor-sharp focus on the global markets. In line with the vision, the company has been investing in setting the right environment for growth, setting market-specific subsidiaries for greater focus, empowered people and market teams, optimize supply chain, and enhance distribution and retail network across the globe. Their carefully crafted strategy in international market has borne excellent results, and with they have got 100% year-on-year increase in the export volumes. Today, over 12% of their overall volumes come from the international markets, and Royal Enfield ranks amongst the top three best-selling brands in mid-size segments in the markets like Europe and New Zealand and Thailand, over and above leading the Indian mid-segment market. So, as the overall supply chain seems to be stabilizing, there's a sharp increase in inflation and interest rates. Despite this in market driven by aspirational and premiumization, they strongly believe that the distinct world-class product portfolio combined with strong brand resonance will help them grow further. Uh, the company has been committed and making consistent efforts to foster a pure motorcycling ecosystem for enthusiasts globally. The robust plans for both apparel and accessories business continue to enable options for self-expression and personalization for their consumers and yield impressive business results for the company. In the year 2021, the focus initiatives resulted in a 45% year-on-year growth in the non-motorcycle business, backed by razor sharp focus on growing service and spare business, as well as their motorcycle apparel and accessories business. As they move forward, the focus on creating a strong business vision, a robust product portfolio, and experience that stay true to the philosophy of motorcycling and also tie back into the larger mission of rebalancing. The robust electric vehicle product and business strategy is at the core of the company's long-term sustainability plans. Globally, major two-wheeler markets are gradually shifting towards sustainable mobility options, which includes personal electric two-wheelers. Currently, the EV offtake is supported by policy-led initiatives such as incentives or restrictions or both in many markets. The potential electrification of the premium motorcycle space is in the nascent stages, and to meet key customer requirements such as longer range, higher performance, extreme durability, charging network, and cost effectiveness without incentives, further technological breakthroughs are mandatory. Royal Enfield has global ambitions of emerging as a premium consumer brand, and the company has forged a long-term global and consumer-centric product as well as business strategy for electric vehicles. The development work is in progress with the dedicated resources and a sharp focus on the future technologies. The products will follow Royal Enfield's world-class product development cycle and will undergo its well-proven global testing and validation cycles before it is launched in the markets around the world. So here we are actually looking at a minimum of 5-year timeline before they actually launch a electric vehicle product. Let's look at the industry, how the industry has been performing. So the industry clocked total sales of 13.9 million units in the year 2021 to 2022, registering a decline of around 11%. The motorcycle industry sales volume stood at 9 million units, and they registered a decline of 10%. The fall in sales in the scooter industry remained in line with motorcycles. They have also declined from 4.5 million to 4 million units. The two-wheeler industry in India went through another challenging year as it was impacted by uncertainties and restrictions on account of COVID, followed by severe supply chain constraints. The point to note over here is that although the demand started showing signs of recovery in the second half of the previous year, the second wave of COVID in the first quarter of the financial year resulted in subdued consumer sentiments. This was followed by global shortage of semiconductors from the second quarter, leading to a severe supply shortage for motorcycles and for motorcycles. A sharp surge in the prices of key commodities such as precious metals, Aluminium, steel, crude oil, copper, etc., led to a significant increase in the overall cost of ownership of the motorcycles across models. The industry has shown steady recovery since then. However, volumes are yet to return at the pre-pandemic levels. Now, we'll just look at the international business, how it has been performing. So the EMEA markets, the largest market region for Royal Enfield this year, accounts for 41% of the international volumes, and it has reported a growth of over 185% year on year for the financial year 2021 to 2022. The company has an expansive network of 46 exclusive stores and 400 plus multi-brand outlets in the region. The company gained around 7% market share in EMEA's middleweight segment in the previous year, as against below 2% market share in 2018. In the EMEA markets, Royal Enfield has been growing at a rapid pace, which is around 50% CAGR over the last 5 years, and has managed to expand the middleweight category in the region. In this region, the two-wheeler markets grew nominally by 1.7%, the motorcycle market by 5.9%, the middleweight motorcycle segment by 11.1% in the same time frame. Looking at the second division, which is the Americas, including North and South America, which is among the fastest growing overseas market for Royal Enfield. Sales of Royal Enfield motorcycles have clocked a growth of 135% year on year in the American region and have accounted for around 35% in the international business volumes. Company has an expansive network of 70 exclusive stores and 175 multi-brand outlets in the American region. The Royal Enfield's market share in the middleweight segment in the Americas region climbed up to 5% in the year in the year 2021 from 1% in 2018. Within the region, Royal Enfield's market share stands around 9% in Argentina, followed by 6% in Colombia and 4% in US and around 3% in Brazil. Last is the Royal Enfield's presence in the Asia Pacific APAC markets. It has also increased significantly over the last 4 years, and the company has started operations in Singapore during the year. The region accounts for 14% of the overseas volume and holds immense potential for middleweight motorcycles and in particular Royal Enfield. Now we'll look at the other segment of the business, which is the accessories and the spare business. The company has reported sharp 45% year-on-year growth for the non-motorcycle business, such as spare parts, accessories, apparels, and services. The non-motorcycle revenue stood at rupees 1587 crore for the financial year 2022, and the business accounted for around 15% of the overall revenue. So the point to note over here is that 15% is coming from accessories and spare business, around 15-16% is coming from the international business, and rest is coming from the domestic business. Which is around 3% higher share as compared to financial year 2019, which underscores inroad Royal Enfield has managed to cover in an attempt to provide its consumer a holistic platform to display their own personality. So 60, and the point to note over here is that most of around 68% of the total requirements from the suppliers are based in and around areas of operations around China, around Chennai, and most of their raw materials are in proximity to their manufacturing plants. We'll just look at how the company is using information technology to integrate their operations and to provide a better customer experience. So to provide a enhanced customer experience, they have integrated multiple digital platforms. They are following an omni-channel approach. They have integrated their application, websites, and other customer connect channels to provide them a seamless experience. There's a Royal Enfield app for personalization and other product selling. So the customers can directly buy their apparels and other services or spare parts directly from the application. They have enabled digital enterprise. So a coordination between the CKD plants, which they are mostly setting up in the international market. CKD stands for completely knocked down plants, where basically the assembling only happens. And the backend plant, which are mostly based out of India. Auto replenishment of, so it works on auto replenishment of spare parts and it works on cloud-based MSTs, which is helpful in monitoring customer requirements. So they use data analytics, AI and machine learning to actually fulfill these requirements well before they actually arise. So now we look at the financials. Yeah, so if we look at the EBITDA, we'll see that in previous years they were recording around 30%, but now they have this year they have been recording 21.1%, which is slightly improving from the previous year, but it's still low from the previous highs. But as they would be expanding in the international markets, the number is expected to increase. If we see the net profit margin, it's also increased from the previous years, but like it's not up to the all-time highs. But again, so the realization has improved on account of price hikes taken, primarily to offset the significant increase in the input cost due to the surge in the commodity prices, and on account of improving share of international business as well as the non-motorcycling business. Brief overview of the financials from the annual report. So revenue from operations have also increased around 18% this year, and share of profit of joint ventures have almost double, but the absolute number is very small, so it doesn't really matter. Earning before interest, tax, depreciation, EBITDA has also increased, so that we have seen in the previous slide, and total comprehensive income, including share of profit of joint ventures, also registered a growth of around 20%. We'll just look at the financials at the per unit basis. So we see that the sales have been increasing at a cumulative basis, but on a per unit basis, the sale have grew from 2017 to 2022 at around 62%. And if we look at the expenses growth, it has grown at 84%. However, they are able to basically get higher operating profit per unit now because of the recent price hikes and their entry into the international markets. And it's interesting to know that if they sell one motorcycle in the international market, it brings them as much profit as it would get if they sell two motorcycles in the Indian market. Certain key points: that during the financial year, no amount was transferred to the general reserve of the company. There's a decrease in the current ratio from 3.4 to 1.9 because of the liquidation of fixed deposits, and same was invested in the long-term mutual funds. This also reflected in the fact that net capital turnover ratio improved from 1.4 to 3.9 because the working capital got reduced, and the increase in sales number also was recorded from the previous year. The inventory turnover ratio decreased from 7.3 to 6.1. That is because of the fact that when they are actually selling in the international markets, so the inventories usually take more time to get sold, so they have to maintain that stock for the international markets. Now, if we look at the sales growth trend at a 10-year, 7-year, 5-year, and 3-year basis, we'll see that the sales growth have actually stopped, has actually reduced in the last 3 years, which goes in line with the auto industry being slowed down because of the COVID, and their operating margins have also taken a hit in the previous 3 years. If we see the common sizes expenses, there was a hike in the raw material expenses the previous year. Apart from that, there are not many changes, and the operating margins have also reduced, but again, they have taken price hikes. So this is expected to increase with their expansion in the international markets. Yeah, and if we look at the ROCE, so currently it's at around 18%, and it has been struggling. The ROCE has been struggling from the last 3 years. Earlier, it was around 40% plus. So that was a great time for the business. And now with their expansion in the international business, and also they're coming up with the other segment, which is the selling of spares and accessories. So this ROCE is expected to go up, and again ROIC would also increase because of their entry into the different businesses. So net profit margins have also been deteriorating, but again they're starting to kick up. Here, if we see certain ratios, so the company has no debt. Efficiency ratios, the inventory days have increased because they have entered international markets, so they have to maintain inventory, and it usually get stuck in the transit as well. Again, receivable days is increase in the receivable days is also attributed to the same fact. Again, net fixed turnover for the same fact. And if we see that the valuation part, so the company is getting a price to sales of around 6.52, so which is a little highly valued. So probably the ideal price to sales should be between 4 to 5 if you want to take entry in this particular stock. And here, the most important thing that we have to look is that if we see the net block, so the net block has been is increasing from the year 2019 to 2022, which is in line with their goals of expansion in the international markets. So if we see that there is a manufacturing facility that has been established, so they can produce in more numbers. And if we see the capital work in progress as well, so that has also been increasing, which means that there will be more increase in the net block. So once the operational margins sets to play in because of their establishment in the international markets, and also with their waiver of growth in the domestic markets as well, so the operational leverage can play out. And we have already seen that on a per unit basis, they are actually recording higher profits as they ever did before. So if operational leverage pans out with their increase in the number of units sold, uh, and also there are other business segments coming up that have been gaining traction, so we can actually see a re-rating in the stock. So what are the thesis pointers? So the aspirational, it is an aspirational product, and the market for aspirational product is least impacted with macro factors. They have been undertaking a lot of branding activities, marketing activities centered at establishing the brand value and the spirit of motorcycling at global level. The expansion happening through international market, the fixed asset have been set up, and capital work in progress is also high, like that we already saw, which reflects in the coming 1 to 2 years the operational leverage can take place, as a bike sold in international market contribute twice as profit as compared to the one sold in India, hence margin expansion. The company has very strong management. All of them are very competent and ride well along with the spirit of motorcycling. The raw material costs can also go down, and as they have diversified their sourcing, the asset turns is reduced because of new plants for international expansion. There can be expansion here once the asset turns get back to their normal number. New product pipeline for domestic and international market. Uh, so there have been regular new launches and product variations, and with Royal Enfield's technical processes, with launch of Himalayan in the early 2016 and Twins in the financial year 2019 and Meteor in the financial year 2021. It has demonstrated its capacity to develop new products, new models from the ground up, incorporating new engines as well as platform. So this has even the classic 350 is now selling on their latest platform. So this has given the existing Royal Enfield users a chance to upgrade and help ramp up its presence in export markets. So all these factors would help achieve the past level ROCE of the company. Now, what are the antithesis pointers? So semiconductor shortage, that would increase pricing pressure as all models are based on ABS now. The international markets is at very nascent stage and have registered tremendous growth, but the base is very low, and it's up to the time to see whether this growth would sustain or not. They are not coming up with electric bikes in the next 5 years, which might impact the market share. Recession expected in the Western world, which might impact the purchasing power of the potential customers of the newer markets. So, and other antithesis pointer is that the product portfolio is very concentrated, which is in the 250cc to 650cc subsegment, and it caters to a very niche clientele. Despite year-on-year improvement over the years, the 250, the greater than 800cc subsegment and less than 250cc segment constitute, so the subsegment that they are targeting, which is 250cc to 650cc, it only constitute only 6% of the total two-wheeler market. So the size of the pie is very small. Further, within the subsegment also, the company relies heavily on the classic brand models, which accounts for over 60% of the motorcycles sold. While the company has launched new brands within the same subsegment again over the past few years, their scale up remains to be seen. Furthermore, several domestic and international players have entered the premium subsegment with the new products in the past years, and the increasing competition could limit the pricing power to the company to some extent. However, it is yet to be seen. So the final point is that we have to see as to how the management delivers in the coming conference calls, how the international expansion has been going, and is the growth sustained over say 2 or 3 quarters. Then we can probably look at if antithesis or thesis pans out.